Good evening, everybody, and welcome to another live stream by the Option School. Today is Wednesday. Tomorrow we have another expiry of this very long and obviously volatile month. So let us today analyze what will happen, what we are expecting to happen on this expiry. In fact, markets today also have gone up, which was slightly unexpected. So ultimately, markets have reached their original levels. 2 days fall was there, and then ultimately market reaching all those same levels in rest of the 2 days. So Friday, Monday, markets went down heavily, and Tuesday, Wednesday, they recovered more than that, and that is the trend we have been seeing. And now we need to see what kind of expiry is expected in the markets on 21st of January. After that, we have another week in this month, and that is also very important because immediately after this expiry of 28th January, which is the month end expiry, we are looking forward towards uh, much anticipated and promoted kind of a budget, which we need to see what happens in that budget also, right? So very important expiry on 28th. Tomorrow expiry is a weekly expiry, and in past we have seen that okay, weekly expiries are not that uh, volatile compared to any average day, whether tomorrow it will be the same trend or whether tomorrow it will be slightly different. Let's try to analyze from the data. Again, I will put a sort of a disclaimer that okay, it's very difficult in these markets or in any markets to predict where the market will go. But yes, we can only analyze through option chain that okay, what majority of traders are thinking, and these traders can be right most of the times. If you analyze last 30-40 expiries, most of the times very well within whatever range we decide, and sometimes because there can be some news which is affecting the markets, these ranges can go haywire. Let's check and see what happens. And thanks Mr. Sridharan for confirming that my voice is audible. Great. Okay, all of you who are new to the channel, please go ahead and click on the subscribe button. Uh, and when you do that, kindly click on the bell icon also, so that whenever we are doing a live stream, you will get the notification. And we do live stream almost every working day at 9 p.m. And all of you who are already part of this big family, you know what to do. You need to click on that like button. Okay. uh, what Mr. AB is saying, attending your live video has now become a habit. Things that you do continuously for 21 days becomes habit. So next thing we need to do is make profits for 21 days, so that also becomes our habit, maybe, right? So that is the right thing to do. Okay. Good. If it's becoming a habit, that's really good. I also enjoy having a bit of discussion with all of you, getting your views, getting your questions. And the day when I'm not able to do this live video, I also feel slightly incomplete. So uh, it's very mutual. I really like doing these videos, although sometimes you see we do not have any new things to talk. But yes, whatever is the market, it really gives a good idea that okay, the thought processes are getting validated with a lot of expert traders. Let's start and let's see what's happening in the market. So this is today's market. It has gone again to all-time high, and almost uniformly it went up only right from the beginning. Although if you all remember today, when before 9 o'clock, SGX Nifty was showing that okay, markets will open gap down by 50-60 points, but opposite of that happened. Markets opened at slightly positive note, maybe 17-18 points. Yesterday when we were seeing, it was 14,521 or so opened at 538. Just for a very short period, 517 might have been touched, but otherwise it was a uniform upward journey. We touched a high of 14,666 here, almost all. I think it's an all-time high. And even on the closing, market has not tanked much, 14,644. So if you see otherwise, it's 130 40 points, and out of that 123 points it has gone up from yesterday's closing. And if you see between open and close, again it's more than 100 points. So the same thing happening again and again, that okay, FIs are buying, DIs are selling, markets are going up only. And if we just follow even these things, I think a lot of money can be made. But only problem is all of us are very intelligent, and all of us think that okay, till now market has gone up, but now it will go down. Till now market has gone up, now it will go down. So we do not keep on buying calls, or we do not keep on creating uh, bullish positions, right? So good up move once again, and again the same trend, that okay, within a monthly expiry there will be 1 or 2 days when there will be a big fall, and then again it resumes its journey on upside. Now a lot of people have started saying that okay, we may touch 15,000 before budget, we may touch 15,000 by this expiry. That always happens, that okay, most of the analysts will come and they say that yes, if market goes up by 200 points, they will give target of another 500 points. If market goes down by 200 points, obviously they need to give targets of uh, downside 500 points. That is always happening in the markets. Now in these markets, let's see now what happens. Previous expiry, which was December expiry, was somewhere at 14,000, if I'm not wrong, 13,980 or so. So we have already added almost 650 points. We have seen markets adding close to 800 to 1,000 points within a month, which is October, November, December. So if we follow the same pattern, so undoubtedly market can definitely add some more points uh, uh, in the series, right? So we will see, we will analyze 21st January expiry also, and we will analyze 28th January expiry also, and we'll try to find out that okay, what are the expectations by 28th Jan, and what are the expectations for tomorrow. Okay, now this is the new Nifty option chain, which is available on NSE website. I don't know why it's showing 650, because market has closed at 644. So this yellow color should have been here. Why 650 is in the money? I have no answer for this. Maybe it's an error, or maybe we are missing something. I really do not know, right? So let us see where is. So if I consider now, let I will analyze in three different ways, and all of you now know. But let us repeat the process. 14,650 is at the money. Some of you have given me views that okay, I'm going very fast when I'm analyzing this option chain. So let me be as slow as possible, but I do not want to bore you to death, right, by speaking very slowly, and so that people need to see my video at 1.5x or 2x. No, I do not like that. So I will go at a normal speed, try to explain things a little bit more, right? So 14,650 is at the money. Why I'm saying at the money? Because market has closed at around 14,644. Now 14,650, what is the premium available? 33 rupees on call side. See this. Even I am not very used to this kind of option chain, but from yesterday onwards, the old option chain is not available on NSE website. So this is 58 rupees. So put premium is 58 rupees, call premium is 33 rupees. If you add roughly around 91, 92 rupees, so you can definitely say market traders are thinking that is why these kind of margins are available, these kind of premiums are available, that market can go up almost by 100 points. So it can touch roughly around 14,750, and it can go down by 100 points, so which means it can touch 14,550. So what can be the upper level if I go by this option chain? 14,750 is 7 rupees. So I will say 14,757 is my upper level. Market should not go, if they are going to follow any logical path of whatever traders are thinking, 14,757 should be the upper level. And if I say on the downside, 14,550 minus 21, somewhere around 14,530 should be the lower level. So 14,530 to 14,757, which obviously is almost 200 points, 200 plus points, should be the final range of the market based on the premium available. This is the one kind of analysis we are doing. This is purely based on what is the premium available at the money, and then at the two other extremes, whatever is the premium available, right? uh, this shows 14,750, 14,550 broadly. Now next is we need to see whether this kind of a thing is matching with what is the highest open interest. Now highest open interest, if I see on call side, mm, is again 14,700, which is very interesting. 14,700. I would have loved if market would have closed today at around 14,600, and 14,600 straddle premium is 92 rupees. Then I would have been very, very sure that okay, 14,700 is a big hurdle. Market is not going to cross that. But now what has happened is 14,700 is the highest open interest, but straddle premium is saying 14,750. So definitely there is a conflict. Uh, Traders based on available premiums are thinking that market can definitely go 100 points. But if you see the option chain, the trades done by the traders, most of the traders are uh, thinking that market should not go up from 14,700. But if you see very closely, this trader, the person who has sold his call position of 14,700 at 17 rupees, maybe his expectation is market should not go beyond 14,717. So 700 to 750 is a range we need to watch. If market really gives us a range of something like 740, 750, 756, I would say, if all the world global cues are pretty normal, there is no big good or bad thing happening in the market. Anytime market crossing 14 720 730, that can be a good opportunity to do a little bit of bearish trade. But yes, there is definitely a conflict between 14.7 and 14.750. Sometimes it has been seen that okay, this conflict leads to although the reason may not be this, but maybe because of some other reason there is a conflict, and because of that this leads to some big up moves also. So if you see all the analysts, everybody is very, very gung-ho. I am slightly uncomfortable with the last 30-40 points of the market. So if 14,644 is the straddle level, definitely 750 is not at all rolled out, right? And if you see on the downside, 14, if you see the highest open interest on the downside is 14,500. Right now, this is interesting. 14,500, and market has closed at 14,644. So now this suggests, if everything is based on logic, we may have a gap down opening of 30-40 points, and then markets may continue. So if we have a gap down opening of 30-40 points, I am 100% sure then market will remain between 14.5 and 14.7. It may not cross 14.7, but it all depends upon if there is any news flow from US markets or anywhere else, right? So 14,500 is the lower level. Obviously, highest open interest is talking about that. Even straddle premium is talking about 14,550. So definitely this shows at least that okay, 14,500 should be the lower level. So 14,500 to 14,700 is the expected rate. 700 750, definitely the data is not very clear, right? And VIX again dropped. Mr. Gunjan says yes, which is a good thing for option sellers. Mr. AB says good that we have locked our profit in one of our trades. That's also good. Good evening, Mr. JP. OI change is highest in 14,750 call side. We'll talk about that. American markets are booming with Dow and Nasdaq up by more than 200 points. Maybe it's a sort of a celebration that okay, a new president is getting sworn in and markets are welcoming him, right? So all those things may take a slightly backseat when it comes to a day of expiry. If I was analyzing last two expiries, which was of 14th and 21st, markets have not went up. In fact, market has closed almost at the lower levels of the day. So let's see. It can be slightly difficult, but yes, if you see straddle premiums, definitely suggesting these two things. Now, these are the two analyses. Now, third analysis, which I give always more weightage, but which can definitely change by the time markets will open. What is that third thing is we always try to judge where is the highest congestion, and generally markets tend to close towards that highest congestion if that is very well within the limit. So if I see the congestion at 14,700, the open positions are 45,000 lots, plus if you see on the put side it is 7,000. So 45 plus 7 roughly is 52. And if I see at 14,000 600, I can take it as 35 and 35, and I will take it as 31. So 35 and 31 gives you a range of uh, 65, 66. So 66 versus 51, definitely weightage is towards 14,600. And if I try to see 14,500, because I now want to check highest open interest also, this shows 16 and 43, which is another good weightage, right? So this gives me a 43 plus 16 is 59. So 59 versus 66 versus 51. So definitely the highest congestion is 14,600. So everything in this chart, everything in this option chain is pointing towards a market of 14,600. But these extra 30 40 points, whether they are there to confuse poor people like us, or whether it has some meaning, I really do not know, right? Another thing is, what about change in open interest? So if you average out the open interest, it says 14,700. Now this congestion zone means market should close very close to congestion. So even if at around 11 o'clock or 11:30 you find that okay, congestion is close to 14,600, you can be rest assured that market can close 25 points plus minus to 14,600. And very rarely I've seen that okay, that congestion zone gets changed. That too, again, if there is some good or bad news and market totally changes its levels, even the max pain level is 14,600, right? So chances are we can close very close to 14,600. That will be a very happy kind of expiry for most of our trades also. But yes, market is market. It is not bothered about any individuals, right? So another thing, generally, which I found that okay, do we play towards these levels or not? So that also gives me many times. You see, all these things are very empirical, and if you ask me that okay, what is the logic for whatever nonsense you're talking, I do not have any logic except the experience I have in markets, right? So another fourth analysis which I do multiple times during the day, which is helping me to find out okay, what are the levels to which we should play. I'm going to share that with you. Just give me a 5 seconds break, let me have a water break, and then I will talk okay, wicks again drop, how that is happening and what is the benefit of that. And I will also tell you one level which is again a very thumb rule kind of a thing which we are using, and it works well. Right, so this gives you an opportunity to click on like buttons, and if you're on mobile, you have to close the chat, go back to your screen, click the like button, and come back and again join the chat. If you have any questions, you can write it. So just give me a 5 seconds break. Okay, thanks for uh, the likes by you. What Mr. Rakshit is saying, what Mr. Ratish is saying. Okay, after many days, Mr. Ratish, bulls keep pushing the prices at the end of the day and kickstart next day with cap up, breaching all resistances, touching new highs. Uh, XPX is more than 1%, SGX positive too. Yeah, that's okay. You see, when our markets closed, that time also all these global markets or US markets were not red, right? So they were also 40, 50 points plus. Now, if they are 100, points plus, which is pretty okay. And so many times we have seen at this point in time, they are plus. And by the time we see the markets in the morning, they are already something else. And negative SGX is negative, our markets open positive. SGX is positive, our markets open negative. So it all depends upon what heavy traders have done, whether they have taken positions, whether they want to uh, book their profits. And obviously on expiry day, a lot of people will definitely at some point in time book their profits, and no wise trader will like to keep his trades till expiry. So a lot of things change in the expiry session, right in the morning itself, and then people start taking positions or people start rolling over their positions to uh, other things, right? Movement of VIX is very fast. Who will say that VIX is index, uh, not a stock? Okay, that's interesting observation. Some resolution in farm protest. Government proposes 1.5 year Delay, yeah, I have also read that news that okay, government has said that okay, for next 18 months we are not going to implement this farm laws, and although farmer unions were uh, very, you can say, I will not say the word adamant, but they were very strict that okay, we do not want something below removal of this farm law. But news is that okay, they are considering it, right? They're considering that okay, but what will happen after 18 months? That is interesting to see if they agree to this. Will they have similar kind of energy to create a protest to remove this formula after 18 months, right? So let's see, that can be a kind of a bait. I think they should not go into that. I am with farmers, all said and done, right? Okay, what is another method? I try to just do it. It's a very mathematical thing. I always try to calculate okay, what is highest open interest, which gives me 14,700, and what is highest open interest on put side, which is 14,500. So 14,700 and 14,500 gives me an average of 14,600, right? Now if I see what is the highest number in COI, which is change in open interest. So if I see in absolute terms, the highest COI is 14,750, which is 15,818, very high number. And on put side, it is 2618, right? So which is for 14,600. Now average of 14,600 and 14,750 gives me an average of around 14,675, whereas average of COI 14,500 and 14,700 gives me an average of 14,600. So I have two averages, 14,600 and 14,675, right? Now 14,600 and 14,675, if I take further average of it, it makes me 14,637 or 6,640, and markets have closed at 14,644. So had it happened that okay, markets have closed at 14,680, I would say I would like to play for the markets to go towards 14,640. Had this average been now this average is 14,637 and markets had closed at 14,590, I will say okay, I will like to play markets for a level of 14,637. As of now, it is fairly balanced. This average is giving me 14,637.5 to be exact, and markets have closed at 14,644. So not much of a difference, wherein you can say that okay, whether it will go down or go up. But yes, morning opening will be important. Whether these data will change, whether this data will drastically change and it will throw max pain, etc., etc., to a upper level or a lower level, you do not know. But one thing which is pretty good, that okay, if market has closed at 14,650 and you're finding 14,700 at only 17 rupees, 14,750 only 7 rupees, that means the premiums have really gone down. In fact, I think if I'm not wrong, the future is trading at a little bit of discount of 10-15 rupees, right? So why this has happened now? Why this has happened? Main reason is this. If you see for F&O index futures, see what has happened. They are selling index futures, and FIs are selling index options also. So once they start selling options, obviously the prices will go down. If sellers are more, prices will go down. And once you start selling index future, that means you are reducing the premium in call side. So that is why what has happened is the premiums on the call side have reduced drastically. Today markets have gone up by 130, 140 points. But even if you see, most of the premiums are going down, except you see 14,500 market has gone up by 140 points. This has gone up only by 28 rupees, 16 rupees, and from 14,650 onwards they're all negative. So this is known as delta decay also. Even if your positions are fairly out of the money, you will find that okay, in spite of market going up, if you're a seller, you're still making some profit. So this is good thing for option sellers, that okay, a lot of selling in index has happened, index futures has happened. If selling in index futures has happened, that means index future prices will go down. That means the premiums in index will go down, rather it's at discount. So that also means that premiums on the call side will go down, and premium on the put side should go up. But since market has gone up, so everything got negated. The put prices also went down because of swing of the market. The call prices also went down because of decay in the premiums, because there is no premium in the future side, which is a very good sign, right? So that is why maybe in some of our positions we are able to uh, do certain things, right? Now what about month and expiry? Interesting. month so far. Already we are plus by 650 points. So what is this data suggesting? Although this data will become much more prominent from Friday, and we have one holiday also, luckily, right? The 26th January is a holiday, next Tuesday is a holiday. So this data, this week is having only 4 days after tomorrow's expiry. So let's see what is this data saying. If you see straddle premium, that is the best judge to see what markets can do. Whether they will do or not, nobody knows, because traders are always living on some expectations, always trading on some hope, right? So based on what traders are buying or selling, at the money premium is 125 rupees on call side, 138 rupees on put side, which makes it roughly around 250 points, right? Which makes it roughly around 250 points, 250 points plus 5 6 points. The market is also not at 650, it's also at 640. So exactly 250 points. That means 14650 plus 250, 149, and 14650 minus 250, 144. Both the things cannot be ruled out. And these are the markets wherein 200 points here and there is nothing, right? So traders also know, in spite of decrease in VIX, what Mr. Gunjan was talking, in spite of futures at slight discount, we are still saying the straddle premium is pretty high, right? So 250 rupees, a good premium, and that means market can definitely touch 14.9 and 14.4. If you see highest open interest, also suggesting that highest open interest for month and expiry on call side, very scary, is 15,000, right? And highest open interest on put side for month and expiry is 14,000. That's really tough one, right? 14,000 and 15,000. So markets do tend to touch their highest open interest. So both of these things cannot be ruled out, and both of them are having 16 rupees and 18 rupees. So 16 plus 18, another 34 rupees are still there on 14,000 and 15,000. So they cannot be ruled out. But if you take average of two, it comes to somewhere around 14,500. Straddle premium suggests 14.8 or 14.9 and 14.4. So lot of firework still available in these markets. And if you see highest COI, very surprisingly, highest change in open interest on call side is also at 6306. I'm really surprised. So that means a lot of positions are getting added at 6306. You see, a lot of positions on call side are getting added at 15,000. Definitely, traders somewhere are, I think, expecting or worried that okay, this market can definitely touch 15,000. But good thing that all the options which today are out of the money, even on call side, even when market has gone up by 100 points or 130 points, have still lost good premium. And obviously put side, the whole chain on put side, we have seen the premiums are getting reduced. Whether there is one more surprise available in the market or not, very difficult to tell. But yes, 15,000, that's why you see a lot of analysts are saying 15,000 is not at all ruled out. And if you see COI here, 14,600 is the highest COI. If I follow the same formula, 14.6 and 15 gives me an average of 14.8, and highest OI gives me an average of 14.5. So 14.5, 14.8, average is 14.650, market is 14.650. So all these positions are not suggesting anything beyond 14.650. It will be really interesting expiry to see what happens. But definitely I'll say, if anytime we find markets at around 14,750, it will be a good chance to take some bearish bets that can be possible in um, month end expiry. So what can be a bearish bet? If you want a really safe bearish bet, market goes to 14,750. Maybe one of the best bets is that this will be somewhere around 25 rupees. Sell this 15,000 call. Chances are, if market comes back to 14,650 or 14,600, you will immediately get 7 8 rupees in uh, yesterday's trade only, right? If you see otherwise, where is most of the intraday trading happening, which is always important for the premiums? See here, see the volumes. Most of the, although change in COI is not reflected there, but if you see, most of the volumes have happened at these 4 5 strike prices. So most of the volume happening at 14,600, on call side, and if you see on put side, most of the volume has happened at 14,500, so or even 14,600. So volume is here, although a change in open interest is not that much. That means a lot of traders today have taken these positions, and ultimately by the end of the day they have scared off these positions. So 14,600 is pretty popular strike price for used for trading by traders today. So everything hinting towards 14,600 expiry. Let's see what happens, but definitely if market goes towards 14,550 during opening time or during closing time, we can get take a bullish bet. The market going towards 14,750, good opportunity to take a bearish bet. Just follow the news flow that okay, there is no news which is saying that market should go to 14,750 or 14,800, right? Hopefully we have analyzed it enough, and today I've done it slightly slowly, so all of you must have understood what four things we are analyzing. So what is the January schedule? Only one more workshop in January, adjustments and firefighting. We will be talking about some methods, standard methods to repair some bad trades, and then what are some best adjustment practices, what are some bad adjustment practices, and when to do adjustment, how to find out the painful leg. We will be talking about this very interesting webinar which we are doing it for the first time, basically because a lot of you have already attended our workshops wanted that okay, let us do one webinar wherein we are just talking about adjustment. So what kind of adjustment you do if there is a sold call, if there is a sold put, if there is a purchase call or purchase put. These are the four possible positions. What kind of adjustments are possible in this? What kind of adjustment in general you can do? So all these things we'll be talking in this webinar. Anybody willing to join can join by sending a message to this WhatsApp number for more details. Mr. Joshi is saying, what are the timings? Timings are 5 p.m. to 7:30 p.m. So it will be around 2 hours and 30 minutes on 30th of January. If I'm not wrong, 30th of January is Saturday, right? Okay, anybody willing to join our gold memberships? You can participate in chat. If you become a diamond member, you can ask your doubts through WhatsApp. If you're a smart hedge member, you can see some of our trades and adjustments. For super smart hedges member in all our single strategy workshops, you definitely get 40% discount plus all the smart hedge trades also. So if you want to join, you can click on this join button, or there is a link given in the description also. You can always contact us. You can see on www.theoptionschool.in what is the schedule for February. I think one now what we are doing only one workshop, which is a 2 days complete workshop every month, followed by one or two single strategy workshops, right? What about likes? Thanks to all of you for having good likes. We would love to have some more likes from you so that we can keep on coming every day, and every day. What Mr. Rajiv is saying, this is the best school to learn all aspects of options trading. Keep it up. So nice of you, Rajiv ji. Thanks. And share this video to somebody whom you think it will be useful. Write your comments, your suggestions, your ideas, your feedback, anything you want us to create videos on. Please write it in the comment section. So, and also I would like to see. Let us see. Let me get ideas from all of you. Give me one level where you think the market will expire, whether it will be 14,500 or 550 or 600 or 650. Let's see who becomes the winner of this closest expiry level. So if we have written 14,610 and market expires at 14,630, maybe you will be the closest. So please let us run this contest just for fun, not for any prizes. Just write in the comment section what is the level of expiry you expect. Write it today, do not write it at 325. At 325 I can also tell, right? So write it today, what is the level of expiry you expect tomorrow in the markets. And if you have still not subscribed to the channel, please go ahead and subscribe to the channel and enjoy discussions on options trading. Thanks to all of you, and wish you a very good day tomorrow also. Do not do any mistakes. If you have any trades pending, please roll them over. Don't worry that okay, I cannot roll over my trades to next month. You can do that. In fact, it's a good opportunity to roll over trades to February also, because premium is steep, and just you need to pass first Feb from 2nd, 3rd Feb onwards, you will see the premiums going down also, right? So don't worry if you are really stuck up in any of the trades. It's not that okay, you cannot shift your trades to next month. You can definitely shift your trades, and if implied volatility rises, it will be a very good opportunity to create some very good iron condors or butterflies for the month of Feb. Premiums are good, risk is less, you are getting a very good space. So think on those lines, keep looking for good new trades. As of now, try to reduce a little bit of time spreads, calendar spreads, and diagonal spreads, because volatility can really play bad, right? Otherwise, please go ahead and see there are a lot of other selling opportunities. So I want all these answers in the chat window, not in the comment section, not in the chat window. This chat will not be getting recorded. So if you write it in the comment section after the video is uploaded, that will get recorded, and we will see. I will find out that comment which gives us the most accurate expiry. Thanks to all of you. Have a great day. See you tomorrow, same time, 9 p.m. Thank you.